Good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Monday, May 24th, 2021. And our top story today, the building blocks of retirement income. Joining me now to discuss this and a lot more are Steve Gresham and Mike Harris. Both are senior education advisors to the Alliance for Lifetime Income. Gentlemen, so great to see you. Thanks so much for joining us on the program this morning.
Good to be here, Jeffrey.
Thank you.
Steve, thank you again for joining us. Steve, I want to start with you. Income's so important in retirement. Where do we start in terms of figuring out how much income we're going to need in retirement?
So this is your number, right? And so you could ask yourself the same question if you were graduating from college and say, well, what am I going to make in my life, in my career? So it's, of course, 100% up to you because it's a function of what you spend, what you think you have obligations for, who you need to support. So it's really about sitting down and understanding first what kind of a lifestyle you think you should have. You do need to look around and see what those obligations are because as we see today, this great baby boom generation, I'm sure we'll talk some more about here, is really just getting started on the concept of retirement. And because of this unprecedented longevity, they've got, in many cases, aging parents still around as well as adult children who may need some support. So I think it's first trying to figure out what kind of a life you actually see yourself living and who's in that life with you as it goes along. Hopefully that makes sense. So we can take that apart some more.
Yeah, absolutely. It makes a lot of sense. So Mike, I want to come to you because Steve makes a really good point. It's personal to each individual of what he or she is what lifestyle they want in retirement. It's also about setting the right expectations. I want to have the lifestyle of a billionaire, but I may not necessarily have the income or the retirement proceeds to do that. But how do you see the income conversation starting?
Well, I think the income conversation starts, like Steve said, what kind of a lifestyle do you want? What are you trying to do? Now, I could have an income that doesn't support the lifestyle I want. But I think when you really start getting down to the nuts and bolts of this thing of how do you really start figuring out how much you're going to need, it takes some work. I mean, there's the old rule of thumb, 70% of your last year's income. Well, that's a great rule of thumb, but a lot of times that isn't close. I mean, that may be way off, either too much or too little. So you really have to start thinking about, as a consumer, dealing with a financial professional, and that's where they come into play. A good financial professional can help you with all this. You really need to start thinking about your income in kind of three levels: the needs, your wants, and your wishes. And the needs are the things you've got to have. You've got to be able to account for your mortgage and utilities and grocery and transportation and clothes, things that you can't live without. And that's at the bottom of the pyramid. That's usually where we call protected lifetime income comes in, where you get something like a pension income goes in there, and your Social Security would fit in there, and income, lifetime protected income from an annuity would fit in that category. Then you move up the chain to the things you want, the fun things in life. If you want to travel, have a boat, or if you like ride horses or go camping or whatever the fun stuff is, things you want to do, but if you can't, you can still survive. Those are filled with what we call probable income from equity, invest stocks and bonds and things where income can fluctuate and change, and you can adjust for that. And then the very peak is wishes. And that's the things you'd want to do if you really were, hit the ball out of the park. Maybe it's charities, or maybe it's that lifetime trip around the world, or funding college education for nieces, nephews, maybe your own grandkids or whatever. So I think the conversation starts with, like Steve said, what do you want to do? But then eventually you got to move into the nuts and bolts. And that takes some work and effort. And on our website at the Alliance for Lifetime Income, we do have a piece that you can download that helps you work through that. It has some thought joggers in there that maybe make people think of things that they wouldn't normally think of. So take a look at it. Doesn't cost anything. You just print it off and work through it. It's a process.
Yeah, a process it is. Mike, I want to follow up with that by getting a look at what the landscape looks like today for retirement income products. And specifically, let's talk about inflation. You and Steve both mentioned longevity increasing. I'm shooting for triple digits, by the way. But what about interest rates? What about inflation? All those things. How does that get factored in? What's that look like today?
Well, I mean, you always got to consider inflation. I mean, inflation's been low for a long time, but if you're as old as been around as long as Steve and I have, you remember in the early 80s, inflation was, 10, 12, 13, 14%. Bond rates were at 15. I mean, it sounded good, but inflation was the killer. Today, rates are, not really great. 10-year treasuries about 1.6%. It's hard to make a good income stream off of your asset. So a lot of people have shifted towards the equity markets, mutual funds, stocks, bonds, and it's easy to generate. I mean, if you got money, it's easy to generate an income stream. Problem is how much and how long will it last? I mean, that's the real question. I mean, I can take out huge amounts of money out of my savings, but if it only lasts me 20 years and I live for 30, I got a problem. So I think the key is it's a diversification. A diversified portfolio makes sense. You got to have a little of the equities. You got to have some in the bonds to take advantage of when rates go up or the market's up. But you also have to have a good slice of that that's protected. You may also have income coming from real estate rentals or something. Not everybody has rental properties, but you also have to, like I said, figure about that. Calculate in what do you have a pension and what's Social Security going to do and an annuity. An annuity is a great place to get income. That's what they're built to do, provide income that you and your spouse or somebody can outlive. So that's how it comes into the planning. But it's hard to do sitting at home watching TV and saying, I could really handle this myself. Well, that's kind of like saying I'll operate on myself too. That doesn't make a lot of sense. So I think a lot of this boils down to finding the right help and doing the right thing, diversifying your portfolio and making some reasonable assumptions going forward.
Yeah, the hardest thing, Steve, is really to get started, I think. And let me ask you, before we go to commercial break, I want to just ask, where does Social Security, so a lot of people say, well, I'm going to rely on Social Security, but that probably won't make up what you need for income in retirement.
No, but it does provide a base. And that's what I think Mike is saying here, is that when you actually do start thinking about the funding sources that you're going to have in that retirement, I always use retirement in air quotes because I'm not really sure what retirement means anymore. I see so many people like my mother at 87 still very active. I don't think she really considers herself so much retired as she thinks of herself as being free. So you want to be able to have some kind of base. And this protected lifetime income concept is like that foundation that you build. Because again, just in the short amount of time we've been talking here, we are still not into a lot of specifics because there are so many variables. And the phrase that I've heard so many times is that people spend more time planning their next post-COVID vacation than they spend planning their retirement. And so all those compartments and all those different areas, all those boxes need to get checked before you can actually understand what that game plan is. And Social Security and protected lifetime income is a good base. One of my questions for anyone is, do you actually know what your Social Security benefit is?
That's a very good question. I'm not sure people know that answer, and that's probably one of the things on the checklist. Guys, I want to go to a quick break, and to Steve's point, we're going to start tackling some of the details. So you're going to want to stay tuned. We'll be right back after this commercial break. Stay tuned. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Steve Gresham and Mike Harris of the Alliance for Lifetime Income. Gentlemen, thanks for staying with us this morning.
Good to be back.
Yeah, it's good to be back, and it's great chatting with you. This is really important stuff. And, you know, to Steve's point, we got to get into some of the details here. And Mike, let's talk about how do we figure out, and I know it's with the help of a financial professional, but how do we figure out what are the investment products available to us, and how do we figure out what is the right investment product that might fit our particular situation?
Boy, that's a question bigger than a bread box, I'll tell you. It depends, I guess, really where you're at in your starting process, age-wise. You know, I mean, somebody that's 25 years old, you know, recently married or just out of school, their viewpoint on the products that they're trying to use are completely different than somebody that's 45 or 50 years old and really getting more deeply engaged into the planning process. But we're always in a planning process. The first thing I always tell people is no matter how old you are, especially once you start working, is maximize your retirement plan at work. If you have a 401k or a 403b or something of that nature, or if you don't, you put into an IRA, just to start the process. $50 a month is huge if you put it away over a long period of time. It can really be a lot more than people think. So you got to think about, okay, as I progress down through my life cycle and I get older, I become more successful at my job and my earnings are going up and then you start looking at other types of investments. Problem is, investments, these things are they're fluid. I mean, you may be in the equity market and in a mutual fund for, from 30 to 45, 50 years old, and then say, well, now I need to adjust that. My risk tolerance has changed. I've got a little older. Maybe I want to move some of that in a different direction. So I think the key gets to be what I used to always tell people, it's never a bad time to make a good investment. And what we really got to get people thinking about is that next Friday is not long-term. Right? When we're talking about investing for retirement and going into the future and living to 90 or 95 years old, we got to really think about long-term investing. And so there's nothing that should be off the table. Everything should be on the table in your possible solution set, but then the risk tolerances, individual preferences kind of come into play. And some people say, oh, I don't want to be in the stock market, it's too risky. Okay, well, then you got to figure out something else. How can we get into the stock market with less risk? So that's where as you mentioned, a financial professional comes in. So I think it's never too early to start, but things will be different as you progress through your life cycle.
Yeah, it's being proactive, being an active participant, working with someone who can help you understand the different complexities of the marketplace. Steve, I want to come to you because there's a lot of research in terms of how people consume and understand information about annuities. What's the latest from your perspective in terms of digesting this information and being able to act? Are people understanding what the makeup is of an annuity, how it works, and how do you use it?
Now, as Mike said, one of the things you want to do is to take advantage of all the research and all of the information that's available on the Alliance website. One of the things I point people to is when you think about how to use a product, actually look through the eyes of the user, the person who's actually bought it. And so there's some good profiles in there, in particular of investors of all walks of from all walks of life who have taken advantage of protected lifetime income. And you get to hear the story basically told by them. And that I think is one of the most important and most often overlooked issues is you're trying to get yourself comfortable with being a retirement investor. Go out and find somebody that's more like you instead of trying to figure out how to make that entire world work and try to organize those parts yourself. Find somebody who's walked this path before, follow them, see what they are saying about it, and have them tell you a little bit more about what to look out for.
Yeah, that's really good advice. And, oftentimes someone has gone down the same road, maybe not exactly the same road, but you can learn from their experience. And that kind of is how you kind of help yourself. Steve, back to you again in terms of let's talk about annuities for a second. Are there certain aspects of an annuity that people should be thinking about? For example, obviously crediting rate or the rate at which the rate of return, that's probably important. I would think fees are important, but also maybe things like the issuer, who the issuer is. Those are probably the other things that people should be thinking about when they start to digest this information.
Yeah, so there isn't just one annuity. And I think that's one of the best aspects of what the issuers of annuities have been able to do over the years is that they have customized these products so that there are all kinds of different approaches. So there are, as you said, Jeffrey, there's a lot of focus on issuers and good name companies, and they're easily found, the ratings associated with all of them. So I think it's actually much more about viewing annuities as a set of golf clubs. Whether you play golf or not, I think you can get along with this analogy, which is that there are specific clubs for specific purposes. There are annuities that you can buy that have adjustable start dates. If you want to take advantage of saving more and then having that income kick in, let's say when you're 75 or 80. I own one of those, a deferred income annuity. There are annuities that are associated with participation in the stock market. There are some that can provide less volatility, also less upside, but also that lower volatility may help some people sleep better at night. But I guess the main point is to do investigation, more research. That's a theme that you're hearing from us today, and you use the words as well, active participant. This is not a passive sport, this issue of retirement. People will go through typically lots of different stages along the way with different challenges. You can get excited about getting started in retirement, and perhaps if you're a spousal couple, you're both vibrant, want to do a lot of things. Then there's a point where one of you is not so vibrant. Or again, then you're like my mom and you're living alone. So very different sets of circumstances. And as Mike said, your conditions will change. So you want to be thinking through all of that. And there are different kinds of products that will fit better in some of those different stages. You just have to spend a little time looking around, again, with the help of a good professional.
Yeah, really good advice there. And Mike, just kind of tying it off, I guess, for this episode of the show, the process to move money to an annuity, it's not terribly difficult, and you also don't have to move 100% of your money over there. What's that look like from your perspective?
Well, you're absolutely right. When we talk about diversification, where an annuity fits in as a slice of a portfolio, and that's all it is, just a piece. Nobody would ever say, put all your money in one stock or one type of investment. I mean, that would be against all the laws of proper planning and fiduciary responsibility from a financial professional. But how do you get it? How do you buy an annuity? You really have to think of an annuity, what it is. It's an insurance contract. It's part investment, part insurance. You have to fill out a contract or an application, and they issue you a contract, a legal binding contract that tells you what you're going to get, what they owe you. And I mean, it is a binding agreement. How do you get one? Well, you could probably find places online where you could go out and select one and pay for it. I mean, it's just like write a check for it is what you're going to do. But there's no help there in a lot of situations. If you know what you want, that's fine. But I'll tell you, the best way again is to find a financial professional that can help you with it. They can help you figure out, do you want one that you got to put all your money in today? Not all your money, but pay for it all today, or do you want you can put some in today and then put some in every month or every year for the next few years? There's all kinds of options there, but you got to think about it as simply as if you're buying a mutual fund or a stock or a bond. You're making an investment in an annuity, an insurance contract that's going to provide you benefits for as long as you keep it. Nice thing is, they are movable. You could move it from one annuity to another annuity if circumstances change. You buy something today, 10 years from now, you say, well, I haven't started taking income. Here's a better thing I like better, a newer contract. Those can be moved and adjusted. So it's not something that's cast in stone. Once you buy it, you're not locked in forever unless you want to stay locked in forever.
Thanks, gentlemen. We're going to have to leave it there, but for people who want more information, you can go to the Alliance for Lifetime Income's website at protectedincome.org. And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more all in one place, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for another fun, exciting, and educational edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.